The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Welcome, folks. Steve Rhodes, Tom O'Brien. I appreciate you growling and prowling out here with us. We do wish each and every one of the Tigers and Tigresses a healthy, happy, of course, prosperous New Year 2013. And the market is kicking it in, folks.
The fireworks still going off from New Year's Eve. Did you see any fireworks on New Year's Eve?
Well, no. My cousin got married, so
Yes.
we were up and we were at a wedding, and it was dynamite. It was
that's
just
great.
absolutely amazing.
Yeah.
So it was good.
Well, so the market saved fireworks for you for today.
And
now, there were plenty of fireworks on Monday, though.
There was.
From swing low to high in the Dow was about 320 points.
Well, what you had there is this. So right now, folks, you get the Dow up 257, Nasdaq's up 75, S&Ps are up 30. And if you want to go back into that whole area, this is what fast price destruction and no volume is all about, coming into a swing. And that's what we had.
Yes.
And it's deviant, folks, but let me tell you something. If I learned anything from just in the gold market in general, and that's where I picked this up about 10 years ago.
Yeah.
Is that fast price destruction without volume behind the move most of the time is ASAP change of trend.
Yeah.
Now, so S&P, we're at the 145 in the SPY is going to put game November highs now a game. So it's going to be wild.
Well, I think the thing to be paying attention, one of the things to be paying attention today is the Russell, because the Russell now is up over its highs.
Yes.
Up over its all-time highs.
Oh, interesting.
Okay. And so I think from the Russell 2000, we should be able to get a good information today.
Yeah.
Today it should stay above that area. If it gets above it, it comes back. Now, depending upon volume in the marketplace, but the Russell is now up over its highs.
So watch this, and we've talked about this before. This is sick, folks. And what it is this. So when I first did the gold report, right?
Yes.
So the key was there. This started in 2001. We're 2013 now, right? And the Russell is the first one that overtook its highs. And what ended up happening then is that it was all the mining stocks.
Yes, gold.
It was all the utility, not the utility, but even the mining infrastructure stocks that went.
Yeah.
Well, guess what? If we go look at the Russell, what is it now?
What do you? Is it housing stocks?
You got it.
Is it housing stocks out there?
You got it.
Yeah.
So what's happening is that it's crazy. That is because this is where inside these indices, folks, what ends up happening, because all those housing stocks get killed, and of course they were up tremendously. Now, one of the best things that I've seen in the last few days is this. Is that everyone, they're talking about, hey, the S&P was up 13, good move and all that, okay?
Yeah.
But bottom line is that no one's been talking about the housing stocks last 3 or 4 days. It's perfect. That's what you need. No, that's what you need for a continuation. Now, what you're going to see this morning, like if I get Lennar up here, Lennar's taking out its swing points this morning. All of them. And, we'll see whether they get the juice behind the move. But bottom line is that's what that's going to be about the Russell again. See, the Russell's deviant. It's interesting, though. But it is. But
what you want to be taking a look at on days like, well, you're always looking for clues in the marketplace,
Right, absolutely.
And so right now, one of those great clues coming from the Russell, coming from the New York Stock Exchange as well. New York Stock Exchange, is at the swing point that it needs to tackle goes back to June of 2011. May of 2011. So it's tackling that area. It's trading inside there, and that level's 87.18. It's at 86.09. So.
Right.
That's going to be another big piece of information, but it suggests that it should travel up to that level.
Yeah, no, hey, listen, the high's the game right now, and what you had last night, folks. Okay, the FTSE. I can't wait to get the volume on the FTSE, and I won't get that for a bit because the FTSE, if this thing is real, man, that means that the leg is up, and then sell the market. So it's going to be wild. There's no doubt. And here's another one. So watch this. The bonds, okay? So the correlation, by the way, folks, bonds right now, all they're doing is coming back to trying to hit the June, what is it? No, the September lows.
Yeah.
So
back to the FTSE real quickly here.
Yes.
So on the FTSE, certainly just simply today's wide-ranging bar.
Right.
And it's done an expansion of its most recent set of swing points, which would be, folks, the September 14th high. So September 14th, one of those key dates,
right,
that we pay attention to. So if you go from that high in the FTSE down to the lows that were put in back on November 19th, it's coming up. It's actually above the 1.272 expansion of that with a wide-ranging bar. That says that it wants higher price as well, which would be about 61.34. Now, you still have an hour and 15 minutes to close out the session today, but it's hard to see that pulling back.
Oh, no, this is one of these.
Today should be a close at session high.
This will be a no pullback day. Yeah. Just because what happens is this, folks, is that the correlation, this baby started on Monday, big time, followed through today, and, you're going to have money managers in that are going to be buying highs again, probably.
Yes.
But bottom line is that, they have to buy it now. If their clients call this afternoon and says, "Hey, we made a lot of money today, didn't we?" Say, "Well, yeah, we just stopped buying this morning." They're not going to want to hear that. Do you know what I mean? They're absolutely not going to want to hear that.
Yeah. Apple had a big move on Friday, so we'll see if what kind of volume gets behind that, because there's one of the equities that they'll likely be buying.
Yeah, no doubt. And that's, and actually, yeah, Apple is going to be just like the IWM again. You know what I mean?
Yeah.
Because right now, folks, Apple is saying it's still a consolidation and still wants to go lower. Now, it's tested those lows 3 times, which is sweet. But what it's doing today, now, see, what should be happening today is that it should be exponential.
It should be able to tackle the highs from December 5th at least.
That's right.
Which is its last downdraft with 37 million shares.
That's right.
It's not doing that.
No, it's not. There's no doubt. It's not.
But it should be able to do it.
You gotta love the markets, man. I'm telling you.
And it does have nice support at the bottom.
Oh.
It's got 2 hammer candles, 1 bullish engulfing, all at those lows.
Yep.
So we know where the bulls are hanging out. They're hanging out down at that 505 area.
Oh yeah.
They're hanging out big time down there.
They're trying to support it like crazy down there.
Yeah.
No doubt. Inside the NDX right now, let's see what Win.
And Win is up, it's just coming into its downdraft. It's got higher to go.
Okay. And so she's got 600,000 shares.
Have the right chart up.
And she looks like she's going to have the volume. That could be an ABC up. So this is going to be interesting. So Win has 673,000 shares right now, and she only needs 3 million would be nice. A couple million will actually do it. But so 2013. Coming at you, baby.
Yeah, no, on the Win chart. So I had it. You had it up over the swing point from. If I got it coming into this down, that's.
Yeah, well, as long as we get the same swing, it's trading 118, and that's 115.91, November 1st.
Yeah, November 1st. Okay, so it's. But you got it. Looks
you
like
got 121.
Yeah.
Yeah. Well, that's interesting. So. That's dangerous.
This is
I wonder who's right.
Yeah, exactly.
Yeah. So what happened? They have on these last swing points, folks. We have 2 different swings.
Wow, that's crazy.
That is crazy.
Oh,
that's not good. Actually,
I actually got to. Yeah. We'll figure that one out.
Yeah, totally.
Yeah, 2013 should be another fantastic year.
No, I think it's there. What you do want to do, folks, though, if I hope that people have learned that just shut off the politicians, because they don't matter. That's the bottom line. They like talking to each other and like hanging everyone up.
Yeah,
flat out. It's extraordinary. It really is.
There's no question it was.
Just give it. What you got to figure now is that every single deal is always going to come down to the very end. You have 500 people, and what would be a shame is that you said it so many times. If we could get term limits in there,
yes, absolutely.
And I guess, what all of us have to do, whatever way you think it should go, we got to start yapping more, because it's the only thing that I think is going to move these guys, is that, if they think that they're going to get thrown out.
Right. That's the problem. Right now our only option is to just vote for the opposite of whoever's in office out there.
Yeah.
Which is not necessarily your best option out there.
And as soon as they get in the club. And then that's it.
Yeah.
So it's them versus us.
Yeah. No, I don't like it. I don't like it. And,
that's all it is.
And the recent events are proof of that.
Showed it.
And you got folks that really aren't solving any problems necessarily.
No.
Just kicking the can down the hill.
And they're not gonna. They're not gonna either. Yeah. They're not gonna. They all talk about that they want spending cuts, but what will happen, folks, is that as soon as the Democrats want, basically the argument is that the Democrats want the entitlements happening.
Yes.
I would say that the argument of the Republicans, as soon as you try to really cut something, it's not going to get cut. Defense is not going to get cut.
Yeah.
It's just not going to happen.
Yeah, just a game. Okay.
And the first place that I would go, man, I think this thing is so easy, but I'm trying to figure out who's protecting that whole industry.
Which
is healthcare.
Oh, okay.
Okay, we know it's a ripoff.
Yes.
You know that absolutely, folks, when you go into the hospital and they order 8,000 tests and, all those bills, we know that's a ripoff. I mean, it's like, okay, so who's protecting that whole industry?
Yeah.
Right?
Yeah.
And it's all of them protecting it.
Yeah.
Okay?
I had my daughter on right before Christmas had a small accident with her knee.
Okay.
And so ended up having to take her into the hospital. Just to get an X-ray, just make sure that she hadn't, bust her kneecap.
Right.
She still needs So picture this. So we're in there. She can't do anything with her knee. Can't bend it. Can't do anything. Right. And so we go through the system. They take X-rays, but then they say they can't do the MRI. I mean, she's already there.
Right.
And the X-ray came up negative, meaning that her kneecap in essence was fine.
Okay.
But she couldn't bend a knee. No, we can't do the when they actually had her there. But still. When we're checking, when they're in essence checking her out, they're bringing knee braces. They're giving her this shot. They're bringing out the crutches, the whole bit. I'm saying, whoa, wait a minute here. We've got a lot of that stuff.
Right.
I don't need it.
Right. Amazing.
But boy, they just was like pile on everything. We're sending you home with a party bag.
Yeah. Listen, it's a party bag for $8,000.
Yeah, exactly.
It's not, and that's to me that's the place that you could get rid of a huge amount of spending right down there. Yeah. Period. For every one of us, it's amazing what they've got away with. It really is.
Yeah. Big costs out there. So we got the XLF. The XLF is up over its high. So that thing has had a nice movement in it for sure. And it was a 1.272 butterfly cell pattern. So if it can close above the highs out here, which was from December 20th, which is at 1670. The XLF, the financials, will head off to the next level out. I don't have that marked on my system, but have to see what's the number one and two weightings inside the XLF right now.
I believe it's going to be J.P. Morgan first. Okay. Yeah, I got to check on this, but J.P. Morgan is last time when I updated this last time. J.P. Morgan was first, and BAC was second.
Yeah,
so. Both of them. J.P. Morgan today, you do 7 million shares. It only needs 30 million for an ABC structure up. Actually, it needs more than that. No, it needs 38 million.
Yeah.
Bank of America, we look at BAC, and BAC's getting tired. BAC wants to come down, so that's going to put some pressure on it. 877-927-6648. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us, folks. We get the Dow right now at 251. Nasdaq's up 74. We get the S&P's up 30. Gold is up 17. Silver's up $1.17. Platinum's up 34. Bonds are down 2 points. We're going to be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, you get the Dow up 253, NASDAQ up 75, S&Ps are up 28. And let's kind of see what kind of move, what kind of volume we get behind the move. So right now you're at 200 million on the NYSE, and you're at 482 million on the NASDAQ. So the NASDAQ is going to have the juice here. It's
yeah,
gonna,
for the first hour of trading.
Right. So what that sets up, folks, okay, the S&P, it's not far for the S&P. Oh, this bar, forget it.
Yeah.
We're going after it. You're going after the shooting star up there. The shooting star is 1474.01, which is nothing really.
No, not after the last 2 days.
No. So that's exactly. And well, hey, we get game here today. Now this is going to be interesting. Oh, so this is going to be deviant. Oh, we got to do this. Because if we get volume behind this move today, you get a large ABC.
So I did that on the 9 o'clock show. I was looking at saying, look at that ABC. It's huge.
So we had 125.1 down. Now you get 100.1 up. That's 1,500. Yeah, it is.
No, they're large ABCD patterns.
That's 1,500.
If you get the volume today.
Right.
So let's take a look at the Russell, because it had the Russell over its swing point from September 14th.
Right.
And if you take a look at the actual, just the 1-to-1, A to B equals CD, takes you up to 916.
Okay.
Which would be a huge move. And quite frankly, that ABCD pattern out there says more like 940 is game. 935 to 940. It's at 869 right now. And that's why I say, folks that aren't long, you don't need to jump on just yet. let some things prove itself to you. Maybe even a little bit of pull. Markets don't end on bars like these last 2 days.
No.
So, now they can slow down and start moving sideways, a little bit of a pullback, but they typically don't reverse off of wide-ranging bars like this.
No. Not in one day. That's for sure. Yeah, That's for sure. Some of the large caps out here, folks, you get, I want to go back, take a look at this one, too. Big Blue's up 421. You get Big Mac up 210. JP Morgan's up $1. We get Coke up 67. Citigroup is up $1.30. Exxon's up 127. Caterpillar's up $3. So if we go over to IBM first, we take a look at IBM. See, this is not enough juice. This is going to be cool. So this is going to be, there's plenty out here that's still going to have some problems here. The juice is there for a nice expansion, but even like with IBM should have so much more volume than we do right now. 1 million versus 9. That's not going to fly.
Yeah, and the last time that IBM was up at this level, which is really coming into November 6th, folks, that had 3.2 million shares, and then it came up and tested that with 4 million shares on December 19th and then gave it up. So that's a little area of resistance out here, which is going to be the highs of December 19th out there.
Right.
But, 4.2 million shares, done a million shares, should have enough volume today to get up over that level, but still not enough volume coming into the downdraft.
No, exactly.
So.
Trader's paradise. That's the bottom line. That's what you have out here. There's no two ways. I mean, this is, you know what is amazing? There's no doubt, folks, that in the context of how the market was up last year, I mean, it was the market, the S&Ps are up 13%.
Yeah.
That's a lot of money.
Yeah.
That's that's a good expansion for the aspect that everyone thinks things are bad. And there's where the propaganda is, even when you... No, I'm not kidding.
No, look, I'm with you there.
So many
I'm with
people,
you on the propaganda side.
So many
There's
people
no
are just,
question.
saying, oh, there's this and that. I'm saying to myself, oh, man, what are you talking about? It's like there's a disconnect. There's still a disconnect. I mean, and the disconnect I'm talking about is what either the stations are saying versus, just what happened there. I mean, and was it... a trader's, yeah, I'd say it's still a trader's market. And, is it still, am I still a bear? Yeah, I'm still a bear, but I'm happy to be long now. You know what I mean? So
yeah.
That's what makes it when they start banging off these numbers, man. That's the real bottom line. Nothing goes up forever, nothing goes down forever.
No. Now, so, if you take a look at some of the weakness that's out in the marketplace, on a day like today, after follow through from Monday, inside the IBD 50, for example, you got 4 equities that are trading lower.
Really?
Watson Pharmaceutical, which was struggling on Monday as well. So that's now coming down into a swing point. It's the first time where you're starting to see some institutional selling inside this equity.
That's WPI. Okay.
Yeah. Now it's moving into the area where it last broke out that had 3 million shares, but it's coming in hot.
Yeah.
It's had 2.5 million shares on Monday. It's already done 1.6.
That's
today,
a big heads up.
Yeah, so that equity, you got Lululemon. That's been I think it's been a big winner. I haven't looked at it recently, but that's off 80 cents.
Look at that Watson too. That Watson's going to go a lot lower, man.
Now that you got some institutional selling, and they're not selling now because of taxes.
No, they're not. Well, hey, listen, none of us are paying any tax anymore. Be like Rick from British Columbia. Steve Rhodes, Tom O'Brien, you stay right there, folks. We ended out 263, NASDAQ up 77, S&P's up 30. We're going to be right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, you get the Dow up 260. NASDAQ's up 77. S&Ps are up 30. And when you do take a look at the whole world structure here, so, NASDAQ up 2.5%. The FTSE's up 2.3. DAX is up 1.8. Dow's up almost 2, and the S&Ps are up almost 2. I figure that the S&Ps get 3 or 4 more points. The NASDAQ, of course, because of good old Apple and Win, what is, and it's that modified index, the NDX 100, folks. It's always skewed, and it's interesting because Win is always that's a big structure inside it. So with Win being up $6 at $1.19, it makes a big difference. That's putting some juice into that baby today. Let's get a Tom in Paramus, New Jersey. Hey, Tom, what's going on?
Not much. I'm looking for a Nike. What do you think a good buy point is, if there is a good buy point?
Nike. He's all business this morning, man.
Hey, the Logotimus meet February 4th through the 7th. Bush will be there. That's when they change the market direction. Put that on your calendar.
What is it now?
It's that Catholic organization, the Logotimus meeting.
Oh, that's right.
All the rich people
about, how could I forget about that, man? Damn.
February 7th, and you have your butterfly set up. Remember, it's February 4th to 7th. Put it on your calendar.
I'll put it on my calendar. Let's take a look. You get Nike, the lows 42, the highs 57. The PE is 20. It's trading at 52 right now.
I think it's going down in an up market.
Well, I wouldn't be going short Nike. This is a large ABCF.
Hey, question. does this gap get filled now on SPY? SPY?
Oh, yeah. It'll get filled. Yeah. So, Nike, let's take a look at this. You get $50 as your B point. You get 42 as your A, $8. So it's already done what it's supposed to do. So what it really did, what Nike did here is this, is that and this is strictly a longer-term deal, folks. When it broke topside on the December 21st, week of December 21st, it finished an ABC structure up. Now, when you finish a structure up, you're going to consolidate. And if you're looking to get into Nike, I'd be waiting.
It did a 2-for-1 split. That's what I'm saying. It could be like Applied Materials. It does a split and doesn't do anything for 10 more years. I don't know.
No, it's my point is the buy on Nike is down at where the gap is. $50, 49.62.
Okay. What about the dollar? Is it going to go topside pretty soon, or is it done?
No, this is
hanging in there.
Well, it is, man. I mean, the dollar is still strong in the context of where we are, and that absolutely has to do with the yen. The yen has been holding up the dollar because the dollar index right now already rejected the lows of today, which is just amazing. I'm sorry?
We have a war with like the Hamas and all that over there in that sea there. Will that bring the dollar up or down?
Hold it. Say that again?
There's all the ships there in the sea there in the Hamas Sea there by Israel. If we have a little war going on, right, starting up pretty soon, will that make the dollar stronger or weaker?
One has nothing to do with it, man. What makes the dollar stronger and what put the lows into the dollar has to do with the demand for U.S. dollars. That's all it has to do with.
These flight to quality, like everybody gets nervous and then pumps up the dollar.
Listen, if you can learn anything right now, with the market still up 247, the dollar is down 30 ticks. But what it's about is that it's about the yen has weakened up so dramatically. Once the euro starts going downtown, you'll see and all the euro did out here today is test the highs from December.
You don't think the euro is going to 140?
No. But here.
Well, what the euro is doing right now, it continues to build up this base of resistance that takes you back to the May 1st, 2012 level. And it has tried for the last, since the beginning, since the middle of December, it's tried to plow through that area, and it can't get through there for some reason.
So only knows the dollar goes up until the Fed meets, and whenever Bernanke talks, they just pump the dollar down now. So it's like I never, whenever put it on your calendar, they pump the dollar up, and then when he talks, they crush it, manipulate.
I'm gonna send you some happy pills for 2013. Man. I am. No, I'm telling you, man.
The plunge protection team. They're at work at all times.
Okay, Tom. Have a great one, man. Have a safe one.
So the euro is absolutely struggling at a swing point, trying to get over that area. It just simply can't build, but it's consolidating up at the highs.
Right.
So it hasn't given any real sell signals either on the daily chart out there. I know. I got to show you. I've showed it to my newsletter subscribers. Okay. It has to do with the euro. So I'll show it to you. There's a pattern that exists inside the euro.
Yeah.
That's really amazing.
Oh, sweet.
Yeah. So
sweet.
It doesn't show up on a daily chart, but it's actually when I went back and took a look at it. I think it went back like 10 years or so. So it was a good enough time period.
Oh, that's
to go back, and it's as consistent as anything. It's really pretty amazing out here.
And what happens, folks, is that inside the currency markets, they love trending. So if you can really pick up those patterns inside that currency market, or just like the yen won't pull back. I mean, it's gonna, but the bottom line is that at this point, it just won't pull back, man.
Yeah, it probably does it about the same time that the euro is starting to pull back.
So it's going to be a beauty
from a dollar standpoint.
No doubt.
The yen looks like it wants to. It doesn't look like it wants to. It is, moving higher. It looks like it wants to get into the $88 level.
And look at the Nikkei. So the Nikkei, folks,
which was closed by the Nikkei. I think the Nikkei was closed last night, so they haven't even had a chance to.
No, they haven't.
So and the Nikkei, I think they opened today or tonight. So our markets do close up at their highs, which they should.
Yeah, the Nikkei is going to go up 300 points tonight.
Oh my goodness, yeah.
So the Nikkei in 1 month has gone from 8,600 to 10,000.
Yeah.
400, and tonight you'll get another.
That's been the trade.
It's currencies. I know. Yeah. Listen, man, currencies are where it's at, folks. Once you wrap your head around currencies, the equation. It's not easy. That's never the right word inside the marketplace, but you can understand the equation a lot more. You know, if we go over to the rand, let me just go with the rand dollar for a second. So the rand dollar still, see, at 8.49 rand dollars to $1 US, folks. Okay. You know, bottom line is that those South Africans are where it's at. And, you know, what we did have happen, you know, inside this gold market right now, it looks to me that it's going to get real close. I mean, the next pullback is going to be a buy, you know, because what you have here is that you got enough folks not believing it. You got the destruction that's down there.
Yeah.
You know, it's coming together pretty good. And what we'll be able to glean out of this in the next couple of days is that, is there enough juice? So see, like right now, if we look at Wrangell's up $2, right?
Yeah.
And it should have more juice. Now, Wrangell looks to me like, you know, I like what Wrangell looks like, okay, because of the way that it traded out all the way in October or September.
Yes.
But what's happening again here this morning, there's still not enough juice, and that's then, okay, you get one more test, but I think that one more test is going to be it.
Yeah, no, I haven't traded this. This is the 3-time direction share.
Yes.
Miners.
Okay.
Yeah, which is NUGT. I had a call on it earlier this morning.
And then the bear one, folks, is dust. I love dust. Perfect. DUST.
I love it.
No doubt.
So I haven't traded those, but you know what this did do. Now I don't know what was. You know, the August 1st, 2012, look at that high volume low down there. But it was tested.
Right.
I mean, the top of it was tested.
Right.
On, you know, nicely with, you know, 9 million shares versus 9 versus 20 million shares. I mean, that's a nice test. It's, you know, it's running into a little bit of resistance here right now, but it's given a pretty decent signal.
No, it is.
Of coming off of the bottom, and would be, you know, nice. I don't know the equity weighting structure inside that. If that is
no, it's a good. What it is, folks, is this. So inside of this whole
be nice if the South Africans were in the
structure. Well, what it is this is that the, let me see. Yeah, it's the Arca Gold Miners Index. That's
that's what's traded off.
Yeah, okay. You know, and so what you do have there is the Market Vectors Gold Miners Trust is 82% of it, and 17.5% is in treasuries. That's interesting. Yeah. See that?
Yeah.
Top 10 holdings.
Yeah.
So that's cash. And that's
yeah. Always nice to have a little bit of gunpowder to
listen,
pull the trigger.
Cash is always king. There's no two ways about it.
Yeah. So, you know, obviously you've been incredibly busy during this hour. What most people, let's talk about it a bit, you know, because you know, we're busy during the day, and typically when we started this show, I don't know, over a year ago or what have you.
Right.
You know, since then you've started the Tiger Real Estate Opportunity Fund.
Right.
But then the way that is working out is, you know, and it's nothing more than, in essence, when I say nothing more, you know, it's a trading opportunity.
I trade every day. Right.
So you know you're trading on the real estate with the way that you're buying houses. I know folks have got, you know, they have access to the white paper that you've done, but maybe just kind of an update as to you know, what you've been seeing on, because it's really important, I think, for folks to understand.
It's great to be back with you. And it'll only be a couple of days, unfortunately. Because, see, what happens, folks, is this. What we're doing specifically is buying them at the courthouse. So I get this, just this month coming?
Yes.
I have 700 of them coming.
Okay.
And what ends up happening is that when you're seeing in there, you're seeing some large players. Oh, yeah. No. We're competing against 4 or 5 other large players.
Yeah.
And where I think our advantage is that what ends up happening is that, you know, we've built the infrastructure. We're building an infrastructure now.
Yes.
There's always someone there. We know what the places look like. We know and real estate still is local, folks. That's the real bottom line.
Yeah. So you've already done your homework.
Yeah.
Well ahead
and we
of time,
continue.
Because with 700 coming in there's not 700 that you're bidding on.
No. Not
even close.
No. What happens is that what will end up happening out of the 700, we'll probably bid on 70, and we'll end up getting about 15.
Yeah.
That's how that will go for the month.
Yeah.
That's how that will kind of shake out.
And that's the nice thing about what it is that you're doing, because like it is local, so you understand the dynamics of the market. You understand the right side of the street to be on.
Every block. Every block.
So,
every block.
Yeah.
And it's wild, folks, because I tell you what you do have happening is that on certain days there are so many that you know that what you want to do is that whether it's Blackstone or us or anyone else, everyone will only spend so much money. So those large days
during the day, okay,
yeah,
that's great.
It totally makes sense.
No, absolutely.
But see, the reason is this: is that they have done the homework and we have too, and we're ahead 4 months, so we know what's coming on.
Yes.
So it makes no sense to go crazy. It's like
right,
that's good. That's good for right now.
That's right.
Because as you're smoothing the deal out, going across the weeks and months and years, well, that's the name of the game.
Yeah.
And what we do have is that we have a very strong market, but in Florida, there's actually 4 different markets. You have right where we are, which is the wholesale market. Period. Then you'd have the bank structure,
right?
Main is short sales at the bank. Then you'd have the retail market. But then what you have in Florida is that you have, because of the older demographic, you have a market when people pass away. Unfortunately, their kids are somewhere else.
Yeah, they're split up across the country.
And they don't care about the place.
That's right. Yeah.
So those 4 markets, they're dynamic, and you just have to understand each one of those markets. And
I've seen people take advantage of taking a look at their longer-term funds, their retirement funds, their 401ks, and putting that to work
out of the fund right now. Yeah, is that half the investors are definitely in
because that's the easy one because nobody's taking cash.
They're in 401ks.
No one's taking cash out of pocket. They're diversifying and buying a weak asset with something strong.
Exactly. And what I will be doing, I'll get you the dates tomorrow too. I'm going to be doing. If you're interested, I'm going to be doing a workshop. And the thing that's pretty cool is that when we started this, we speculated on the first spreadsheets. Okay, what it is.
Right.
Yeah. Let me tell you,
it's
folks,
nice
it's over the top compared to what we speculated, and that was. But anyway,
it's nice to be conservative.
No, it's good. So that we do have 2 different funds. We have there's a feeder fund and there's the main fund. But you can check it out at TFNN. But I am going to be doing a webinar probably 2 weeks from now, and that webinar, by the way, is going to be. We have all real numbers now because which is great. We have 14 units, 12 properties, in the last 12 weeks.
Yeah.
So we're cooking. We're cooking with gas, no doubt. And bottom line is that what does happen. If I could just pull these things apart. That's the thing.
And sell them. The nuts and bolts.
No, totally.
I was talking, at a New Year's party, I was speaking with someone who's building a piece of property up in northern Minnesota. Not easy to get to on a lake. And so we were talking about it, and he was saying, what he's finding out, because he wasn't sure, whether he wanted to build right now, but he's just simply saying with the cost of materials and labor, he's seeing it go up versus go down, and he's just saying so financially, it just makes sense to do it now versus wait for a couple of years.
No, totally. It's building your crew now.
Yeah.
That's because right now, what happens, folks, is that people still need jobs, and we got a good crew. I got actually 2 crews going right now, and I'll have 3 probably in another 2 weeks. But what happens is that you want to build those crews, build that loyalty, build all of that right now, because a year from now, my take on it, everyone's going to be competing beyond belief. You know what I mean? So it'd be harder to get help. Right now, you can get very good help. And the key is, like anything else, when folks haven't had a job for so long, they want to make sure that you're going to be there and they're going to be secure. So what I'm doing specifically, I'm just taking our time as we're building this to make sure that the people that we do hire, we're going to have them for the next 4 or 5 years. You know what I mean? Steve Rhodes, Tom O'Brien, appreciate you growling and prowling with us out here. Right now, you get the Dow up 237, NASDAQ up 69, S&Ps are up 26. You stay right there, folks. We're coming right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll
get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, we get the Dow Industrials up 245, NASDAQ up 72, S&Ps are up 27. Let's go to Mac in Denver, Colorado. Hey, Mac, what's going on?
Hi, guys. How you doing?
Doing great, man. You having a good day out there?
Yeah, sure am.
Cool, man.
I wanted to ask you guys, all the money that I trade almost is in IRAs, so I can only trade ETFs, especially if I want to go short.
Okay.
And I wondered if you could suggest to me some way to play the decrease in the value of the yen and or the increase in the Nikkei index with using
I think the ETF for the Nikkei is EWJ. We'll have to put that up and see if that is the. I believe that is the Nikkei.
Yeah, EWJ is the iShares for the Nikkei.
Most of those, I've looked at that and also looked at the YCS, which is short the yen.
Yeah, and then okay, YCS. Okay, so let's take a look at that.
They're pretty illiquid.
Well,
YCS isn't too bad.
Yeah, that's 214,000 shares already today.
Yeah, YCS is of all the ETFs that I found for the yen, YCS is the most liquid of them. There's another one out there.
Or not?
I'm sorry?
Is that leveraged 2 to 1?
No, I don't believe so. Let me look at it. That's oh, it is. Yeah, the YCS is. Oh my God! I wonder why it went up so much. Yeah, it's 200%. So you wouldn't want to be buying that right now, though, Mac.
Oh, absolutely not.
Oh, cool.
Could you suggest an entry point on that?
Yeah, well, that's at 51 right now. So folks, this has gone from $40 to 51. I mean, the first time as it comes down to like 47, you know, I'd see what type of volume it has coming down at that level. You know, that's where it had some big juice in the way up on December 19th. And this is going to be a weighting structure because what we've had inside the yen, and this is where this thing gets really deviant, folks, is that the yen, no doubt, gave a nice signal on the 28th of December to sell, and then it refused to basically confirm it the next day.
Right.
And what does happen is this, is that when you get a parabolic move like this, you just got to let it go a little bit more. And you know, so I would sit there, I would sit there and let it pull back, Mac, first and say, okay, how do we pull back? And then if you get a deep retracement, it would just be beautiful, man, you know.
And then how about on the Nikkei? Is there anything leveraged on that to play it long?
Well, what you have is this. You have just the NKY. That's not a leveraged product. That's just a one-to-one product. That is the exact mimic of the Nikkei 225.
But no leveraged ones that you know of.
Well, you know what? I'm sure one of the Tigers and Tigers will tell us something. But hold on 1 second. DXJ? No. Yes? I don't know. We'll put our ears.
Yeah, there is a DXJ, but that's not leveraged.
Okay.
Yeah, I'm not sure what's underlying underneath that.
So
it looks like financial service.
What we will do is that I'll do a little work after we get off the air on a leverage product for the Nikkei. But you know, so and the NKY, what you want to do is this: same type of setup. You know, the amazing. 1 second, hold. That's the index I got. NKY. We put up the ETF structure inside it. Yeah, this is still liquid enough too. The NKY, that's 280,000 shares today. This is a monster ABCF actually. So you got 14, 12, that's 16. Well, this is going to go up to 16 first before you get a pullback. But the NKY, we'll find a leverage product for you, Mac.
Okay, appreciate that.
Have a great one. Have a safe one. Steve Rhodes, Tom O'Brien, you stay right. Oh, listen, that's it. That's amazing. It. Oh, man, that's
Time
quick.
flies, baby.
Basil Chapman, Larry Pizzavento, Daryl Mott, David White, Ken Shreve, myself. Have a great one. Have a safe one, folks.
Take care.